Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 29, 2021. I will cover stock market weekly update. This is going to be a macro view. We will look at the small cap, medium cap and big cap stock news a little bit later. So today, right now, we'll focus on macro view, the big picture and see what's going on in the market. So we will touch on major stock news, sector performance, review performance of major indices, spot major trends, and review performance of major ETFs, which is exchange traded funds and stocks, and also spot few good stocks to buy. So with that, let's jump in and get started. From a major stock news perspective, looks like US firms slash the oil and energy output. So we got to watch stocks like WES, MPLX, and big oil like Chevron, BP, Suncor, and so on and so forth. There could be some oil stock surging up next week, so that's where we have to watch carefully. I think Hurricane Ida is causing some spin and it might cause oil price to increase. So next we got China consumer spending is weak. So this is where we have to look at electric vehicle stocks and luxury goods stock. Think about electric vehicle stocks like NIO, XPEV, Li, even NIU, which is a electric scooter maker. And we should also look at big names like Alibaba, JD and some of those names. And then we got here US booster shot plans. Looks like we have a booster shot coming up for COVID-19. So some of these booster shots will really help the retail industry so people can get out and buy the retail merchandise. And also the travel stocks and leisure stocks, they might also get some boost here with the COVID-19 booster shots. And we got here Apple. Looks like Apple settlement is done. It's not a game changer. Now Apple has agreed that developers have right to tell customers how they can pay apps for outside of App Store. I think this might have some temporary impact on Apple, but looking at stock and how the way stock reacted, looks like it's not a major news here. So at least app developers have got one more avenue to collect the payment from customer besides App Store. Now we got here Jeff Bezos. He's Amazon, ex-Amazon CEO and Amazon founder. Looks like he's got some battle with Elon Musk about SpaceX. Jeff Bezos has got his own Blue Origin. So it looks like this time it's Amazon complaining that they need to get some federal subsidies for Blue Origin and its space ambitions. And we got here next week or next couple of weeks, the big news is around federal chair Jerome Powell and what he will say about inflation. Looks like right now Fed chair Powell thinks inflation surge is temporary, and this is where he's kind of thinking maybe this may not mean much for interest rates. And here you got major indices finish the week higher, especially after Powell, Fed Chair Powell prepares market for taper. So as taper is in discussions, this is where central bank is really indicating the market there will be some taper in the tune of 120 billion per month in the bond buying. So I think because stock, federal Fed chair is saying that in right now itself, it may be okay. Market is kind of factoring in as you go forward, unlike what happened back in 2013 when the stock market tanked. So I think it's great of Jerome Powell to really tell the market what way he's heading, where is his head at. And then you got here natural gas stocks. Natural gas source, as investors are starting to believe in this. We got Royal Dutch, Kinder Morgan, EPD, LNG, which is Cheniere, and OKE. Some of these names can take advantage of this natural gas phenomenon. And as you know, natural gas goes up and down. That's where stocks like this are good ones to really trade and take advantage of this phenomenon. And then we got here a car semiconductor shortage. Everybody knows all these big autos like Ford, GM, Neo, and all these folks have got a lot of shortage when it comes to semiconductor. So we should look at stocks like Nvidia, TSM, which is Taiwan Semiconductor, NXPI, Maxim, On Semiconductor. Some of these names we should look at and buy them as on the down days. So with that, these are the major stock market news. We will jump into a few charts and see what we can spot here. So before you go on to the chart here, from a Fed watch perspective, we got CME Group putting out some probability here. So what CME Group says is, when the Fed meets on 22nd of September, which is next month, there is probabilities really they're not going to change the interest rate. It's going to be staying put at wherever they are, which is around 0 to 25 basis points. So this could be reassuring to the market that there is no major change to interest rate by federal government when they meet on 22nd of September. This is really helping the stock market because right now the probability is really 100%. That really will help stock market. And now we'll go into the past performance of major sectors here. I think it's always good to keep an eye on what's going on, what's trending, how we can invest going forward. As you look forward, if you're a shorter term investor, look at the shorter term trend here. As you look through here in one day, we got basic material did nicely here. Energy did extremely well last Friday. And as you scan through here, healthcare did not do much, and even utility did not do much. But as you trend towards what's happening on the weekly basis, you can see your consumer defensive names are really not doing great. They're negative for the week. And also healthcare, it's negative for the week. And we got utilities negative for the week. So I think we should look at some of these areas like consumer defensive, energy, and utilities. If you're a shorter term investor want to trade in and out, you could look at some good names. We will look at these sectors and top stocks in sectors as we go forward. Then as you look through the 2-week performance here, we got here basic materials down, consumer defensive down. So as you look through here consistently, consumer defensive seems to be down all along, as you can see here. Then we got here monthly performance. On a monthly performance basis, we got here consumer cyclical down. Think about major stocks in consumer cyclical like Amazon.com, pretty much lagging the market of late. And as you can see here, we got financial services doing great. Think about XLF, JP Morgan Chase, and Goldman Sachs. Some of those names are doing really well in 1 month. And then we got here technology. Technology seems to be, kind of doing nicely over the period of time here. And utilities are doing okay, 2.3% for the month. Now as you project yourself, as you look through the 3-month horizon here, past 3-month performance, materials are not doing great. Think about gold, silver as an example, and consumer defense is also not doing great. So last year, I think with the COVID, people tried to stock up big time, and now I think consumer defensive are really not doing great compared to past year's performance. And then you got here energy. Even though energy is doing great in 1 day, 1 week, but they're not doing great in 3 months. I think now, even US producers can produce energy. That's why the price of energy high, the energy performance, stock performance is a little bit lower here. As you look through the 6 months here, clearly real estate is doing well. As you see here from a phenomenon, people went from cities and major areas to suburbs. Now slowly they're migrating back to cities with the workplace opening up slowly. That's why it looks like real estate is pretty good in the near term in a 6 months type horizon, followed by even financial services. They did great. And then you got other sectors like technology doing great, utilities, and even basic materials. And now if you go through a little bit longer term performance, how is it doing 1 year, 2 year, 3 year, 5 years? As you look through here on a 5 year basis, clearly technology is the clear leader here to 81% in past 5 years, followed by consumer cyclicals here. Think about stocks like Amazon.com as example, and then you got other names like financial services and healthcare. So if you have a longer term horizon, look at 5 years here, look at the big performance here, buy their stock, as they go down, which always happens on a time to time basis. So that's how I'd go. I mean, even though you think by looking at this shorter term, you think energy is doing great, look at the longer term picture. Energy is in a little bit different way. Energy is going down slowly with emphasis on all the renewable energy, the natural gas, electric vehicle batteries, electric vehicles. Energy is in a long term, it's in a downturn. That's why when you invest in energy in the shorter term, understand it's really a trade that you're making, not really long term investment, because in the long term energy may not do very well because of global warming, and people are raising up to consciousness about energy and the harm and carbon footprint. So that's why look at the long term picture, think about 3 years, 5 years as you invest and trade in the shorter term. If you go towards where a longer term picture is taking you, I think you'll be successful in the investing journey. So with that, let's jump in and look at, what, when you talk about sectors, what do we mean? Many of you might be wondering, hey, what, I have some stock, I'm just giving some example, maybe skills.com, maybe jd.com. You might be wondering why I'm down. And here we are showing here great performance, a lot of greens. This is where we got to take advantage of what are the key needle movers in these sectors and understand why these sectors are moving the way it is. So from major stock perspective here, as you can see, I got here few names for you. So when we talk about major sectors, when it comes to basic materials, we got here BHP, Linde, Rio, Whale, SHW, ECL, and some of these names are really moving the market. Even though some of your names may not be here, understand when basic material moves, it's moving because these big names are really moving nicely. So it's good to get some exposure to these names, especially if you are a trader or even investor. Look for these bigger names here, so that way you get exposure to basic materials area. And look at some names like Nucor as example, steel company doing great of late. We got ArcelorMittal, MT. We got gold, a Barrick Gold, one of my favorite here. DuPont, Dow, NEM, again a gold stock, Freeport McMoran, ECL, even here Sherman-Williams. All these are great stocks. As you look at these sectors and sector performance, feel free to have some of these leaders in your portfolio, so that way you're not worried about short-term, up and down of the market. And then when it comes to communication services, back like maybe 5-6 years ago, I think we have this new sector called communication services. That's when we have stocks like Google, Facebook, Disney. They all came into communication services sectors from technology. I would pay attention to see these big names here, get some exposure to these big names, because off late these bigger companies are really taking the market and smaller names are really getting crushed sometimes. So that's why get exposure to these bigger names, especially if you have a retirement account or a IRA type account. Have some of these bigger names here, they will do very well. And when it comes to consumer cyclical, we got the names here like Amazon.com, Alibaba, Home Depot, Nike, McDonald's, and so on and so forth. I think it's good to get exposure to these companies, especially look at companies like Amazon.com, which is down of late. Good to pick some of these stocks up. If you can't afford the whole stock, you could buy fractional stocks and invest that way. And then we got energy sector here. Clearly, we got some good names here like ExxonMobil, Chevron, RDS, Total, BP, and so on and so forth. I think it's good to invest in some of these names, mainly trade in and out because these energy stocks have got some good days, some good bad days. And overall, we know from emerging trend, energy is in a downhill trend. So that's why energy stocks good to trade in and out, and make some quick trading decisions. And then you got financials. As we looked at earlier, financial stocks are really doing great. So this is where we can look at major stocks like Berkshire Hathaway, JP Morgan, Visa, Bank of America, Mastercard, PayPal, and so on and so forth. In financials, typically, as you might have understood now, whenever there is a interest rate hike type news coming up, that's when bank stocks will typically do well. Think JP Morgan, think Bank of America, Wells Fargo. But whenever there's a rate hike coming up and there's some uncertainty, that's when the fintech stocks like Visa, Mastercard, PayPal tend to do well in a lower rate environment also. This is where we got in the financial, we got two types of market. One is interest rate sensitive. When interest rates goes up, banks do well. When interest rate goes down, these financial services companies or fintech stocks like Visa, Mastercard, PayPal, they tend to do well. And then we got here healthcare. Healthcare is a great sector. It's a very steady Eddie defensive type sector here. We got great names here: Johnson and Johnson, United Health, Pfizer, and so on and so forth. I think these are clear leaders. We should buy some of these companies in any stable portfolio so that way you are balanced. And then you got here big industrial stocks like UPS, Honeywell, UNP, United Pacific, and so on and so forth. Many of these are great stocks. I would buy these on any down days and have it in your portfolio. And then we got real estate. Of late, real estate names are doing very, very, very well. With people migrating back and forth, city to suburb cities. These stocks have been doing great here. We got here both categories. We got some REITs, which are data center type REITs, and we also have some great stocks here. I would look at some of these names. We got both REITs and home builders. Both are doing well. And then we got here great technology stocks here. Think about Apple, Microsoft, Taiwan Semi, Nvidia, all doing great now with a lot of emphasis on digitization. These stocks do very well. So then we got, last but not least, we got utilities. We got Next Era, Duke, Southern, SOD, and so on and so forth. All of these stocks are also doing great. So in a balanced portfolio, pick up some of these names, especially if you have a retirement account or an IRA. Pick up some of these names because these are pretty steady, stable stocks. They tend to do well. Now let's look at some of the major indices. Many times you wonder, hey, what? Dow Jones Industrial Average is going up, S&P 500 going up. But what's happening to my portfolio? My stocks are not doing well. You might be having some stocks like, very small cap stocks. Maybe, some of these names like, Virgin Galactic or Tilray. You may be wondering what's going on. Bigger market move is happening because of these indices here. If you look at Dow Jones Industrial Average, Goldman Sachs, United Health, Home Depot, Microsoft, Salesforce, these are clearly leading the Dow Jones Industrial Average. As these stocks are going up, Dow Jones Industrial is going up nicely. This index does not move its needle by these small names like Tilray or even Virgin Galactic and GameStop. Instead, they look at Goldman Sachs, United Health, and so on and so forth. That's why it's good to get exposure to some of these names and on the down days, so that way you can also move along with the Dow Jones Industrial Average. And then you got here S&P 500 ETF or SPY as you call it. You also hear S&P 500 making record territory. You might be wondering, where is my stock? But if you invest in stocks like Apple, Microsoft, Amazon.com, Facebook, Google, so on and so forth, your portfolio can also do well along with the S&P 500 index. Otherwise, you might be wondering why your portfolio is not doing well when S&P 500 is doing great. And then you got here QQQ, which is really technology stocks. You got Apple, Microsoft, Amazon, Facebook, Google, Nvidia, so on and so forth. I mean, as you can see here, you could see a good mix here. Look at QQQ, look at S&P 500. You see top names in both. So this is where when the big stock like Apple, Microsoft moves, along with it will move S&P 500, QQQ, and even Dow Jones Industrial Average for that matter. That's why it pays. It's good to keep a close attention to how the bigger names like Apple, Microsoft, Amazon do, because they're part of many of these broader portfolios. And then last but not least, we got here Russell 2000 with the inclusion of stocks like meme stocks like AMC. Russell 2000 is also, it's going up and down drastically. A lot of volatile stocks of late in the Russell 2000, smaller names. So I think, if you're an investor, pay attention to names like AMC, Intelia, one of my favorite stocks here, Crocs, and even Lattice Semiconductor, TAT, Healthcare, and so on and so forth. These are some good names. Typically Russell 2000 will lead the way when it comes to broader markets. It's good to see how these stocks are doing and buy them on the down days and accumulate, because these stocks are in Russell 2000. This index, Russell 2000 index, will buy these stocks, and it's a very stable volume, pretty liquid stocks. So with that, now let's jump in and look at some charts here and take it from there. So as you look through here, S&P 500 index, which is called /EX in the futures world, doing great. It's in a record territory right now, and as you can see here, this index drops once in a while. So those are good buying opportunities right now. Clearly, we are kind of wondering where to go from here. We are in a record territory right now when it comes to S&P 500. Then you got Dow Jones Industrial Average. It's wondering where to go here. It's also close to record high here. It's in a trading range. Did not do much in the week's time, but generally it went up. And then you got Nasdaq here. Nasdaq is also at a record high. You got to be careful when you invest when it's record high. And then you got a Russell 2000. Look at this huge surge in Russell 2000. You got to be careful here. I'm sure there'll be maybe a little bit pullback as you go forward. So be very careful here. Russell 2000 also gives you a lot of opportunities. It goes up and down. Now is not the time to buy because this surged really high last Friday. So let's wait for a small pullback here and then scoop up the good names and take it from there. Then you got here bond. Bonds are really going down, as you can see here. Fed is kind of saying, what, rates will be at the same place. We may not raise the rates. There'll be some bond tapering news coming up. That's why, if the bond tapering is going on, Fed is not going to buy bonds. Bond will typically go down. That will in turn, there will be interest rates, might either, right now, near term it will stabilize, it will stay low because Fed is indicating they're not going to raise interest rates. That's why bond is coming down, interest rates also kind of coming down. I will be keeping a very close attention to interest rates, because as you go forward, Jerome Powell might decide to ratchet up interest rates. Not right now, maybe next year. So that's why good to watch TNX, or the interest rates, and even inflation. As inflation picks up, there is a chance Fed will raise the rates, which will impact stock market. And then we got here crude oil. Crude oil, after bouncing back nicely, now it's kind of thinking where to go. I'm sure there will be some improvement in the crude oil because of the Hurricane Ida. And then you got here gold. Gold is kind of trying to see where to go. After the big drop here, it's surging. Gold is, I think it's good to buy on these drops here. Pick up some good names like A Barrick Gold. Even you could buy GDX and even Gold Junior ETF, GDXJ, Silver, some of those names. When the market is down like this on the down days, pick up some gold and some materials and take it from there. And then we got here DXY dollar. Dollar is not doing great. That's a good news. As the dollar weakens, stock market typically goes up, and even these commodities like crude oil, gold, they tend to go up when the dollar index comes down a little bit. That's the broader indices here. And now we'll look at some broader ETF and see what they're doing. And before you go there, let's look at skew. Skew is one of my favorite here. Before you go there, let's look at how S&P 500 has done in past 5 years. Clearly, as you see here, in past 5 years, S&P 500 has done great. It's a great bull journey. So there are bumps on the road, 1, 2, 3, big one, COVID-19 crash, and up we go. We are actually at the record territory. And as you look through the skew here, skew is a very, very, very important gauge on what stock market might do as you go forward. So as you see here, it's a leading indicator. So when skew is going up here, as it goes up and up and up, it hit this red line here, which is above 160 type level. So when this happened, stock market promptly dropped. So this is where, look at when it's hitting this 160 mark, that's a heads up for you. There is a drop coming up. Promptly there's a drop here. Hit 160 mark here. Promptly there's a drop here. Skew again hit the high here. December time frame, big drop, COVID-19. And now, as you can see here, it's above 160 mark. So we got to be very careful here. This is not a time to be, investing in these speculative names. Be very careful. Look at some good value names. Look at stocks that are valuation perspective pretty good, and look at those names versus investing in the next hot stock at these levels, because clearly what skew is telling us is, hey, there is a heads up here, be careful, there may be a drop. That's why we got to be very careful here. Reasons could be several. For example, back in 2013 or so, Fed raised the rate. 2019, again Fed raised the rate, market crashed. So reason could be several, but skew always gives you heads up, hey, watch out, there is some drop coming. Whereas over here, it hit 160, reason is COVID-19. So there may be several reasons, but regardless, skew always tells you, hey, watch out, there is a drop coming in stock market. Next, let's look at VIX. VIX is doing nothing. As you can see here, it's almost marking time here and going down slowly. Whenever this happens, be careful, because this tells you, there is a big explosion coming your way. So that's why it's okay to buy some longer term VIX call options. It's basically it's a hedge here. You might lose money on them, which is okay, but if the stock market tanks, you'll make that money up. So with that, it's good to buy some long-term VIX options, so that way at least there is some hedge for you. And in addition, you could also buy defensive names like gold, and even stocks, few good stocks in some sectors like consumer staples. That will also help you a little bit to hedge. And even healthcare is a good one to hedge against some of these drops. And now let's look at major indices. From a major indices perspective, same theme continues. The major indices, SPY, S&P 500, Dow Jones, QQQ, they're all all-time high or almost all-time high. Even IWM, Russell 2000 is trying to bounce here. So that's where you got to be careful. Broader indices are really going up. This is some people compare this to back in good old .com days. Be careful. A lot of speculation going on here. People are really buying without understanding what they're buying. Is it a good time or not? And as you look through here from a bond perspective, bond is trying to the TLT 20-year treasury is going up a little bit, as you can see here. This is a good hedge here. If you buy TLT when the stock market drops, this will give you some good hedge. Longer term, it may not be a good investment, but it always gives a good hedge. Then we got here gold. Gold is a good defensive play. Gold is trying to tick up a little bit. So when gold ticks up and XLP, consumer staple, ticks up, watch out, because these are defensive sectors. When they pick up, typically stock market gets a Q, and that might be a leading indicator for a drop. XLU doing great here. Some bump here. XLU is a good one because a lot of folks who want dividend income, they tend to invest in XLU. When the interest rate is low, you don't get good money from the banks, and that's when people go into XLU, which is a solid dividend payer. And then you got technology, clearly all-time high here. Semiconductors doing great. Look at semiconductor here as an example. Drop, went up, drop, went up. So right now it's not the time to buy semiconductors. Wait for a small pullback and then buy good names. I think we got some good drop maybe a week or two ago in some great names, and like LRCX and AMAT and some of those names. You buy these semiconductors on a down day versus right now, which is all-time high. Then we got here XAR. Think about big defense contractors, Boeing, Lockheed Martin, Northrop. Some of those names are lagging the market. It may be okay to buy them slowly and accumulate a nice position. Then we got energy here. Energy is clearly not doing great of late in the last 3 months. I would be a little careful here. I would buy energy on the down days, and it will be a great trading opportunity. Then you got retail here. Whenever there's a news about vaccination and Delta, some of those scare these XRT retail stocks will drop. But whenever there's a good news about vaccine, less people are getting sick, it goes up. It's a great trading opportunity here. I would be picking up some if it dropped a little more, and just trade them as it bounces back. Then you got IYR, real estate. Real estate seems to be a little consistent trend here, clearly nicely going up. Right now it's wondering where to go. On the down days, it's good to pick up some good real estate stocks. Think home builders, think REITs, and pick some of those names. And then we got financials here. Financials have done great. Mainly I think there are two camps like we talked about. There are bank stocks which will benefit from rate increase, and then you got your financial or a fintech stocks, which like credit card companies. They will do well if the rates are low. That's why pay attention to XLF. Right now all-time high. It always gives you opportunity. It always comes down once in a while. Then you can buy some XLF and take it from there. Then we got XLI, industrials. Clearly, industrials are roaring back, as you can see here. I would wait for a little pullback, buy some industrials. Joe Biden's infra bill can help some of these names, and we'll watch closely. Now let's look at the big stock names here. These are big cap stocks. Typically move these indices because these are big names. They have a lot of weightage. So with that, clearly, let's look at Microsoft. Microsoft is clearly in a bullish territory here. It's above its 100-day, 50-day, and 25-day moving average. It might bounce back to this 25-day moving average here around 299 or so. Then we can buy some. I would not buy at these levels. Wait for a small pullback. Microsoft has done great. Looks like they're increasing the price for Microsoft 360. That should help them. But right now, wait for a little pullback here. As they pull back into around, say, 295, 296 level, you can buy slowly. Looks like it's in a bullish territory. Apple, same story. It's again touching the 25-day moving average. I think it's good to buy, as it comes a little below 25-day moving average and take it from there. Right now, Apple is also at an all-time, close to all-time high. This stock also gives us opportunity. As you can see here, stock bounced back, came back 3 straight days. I would look for those opportunities here. They will always come and I would buy some. Then you got Amazon.com here. Amazon.com, after going down for a long time, now it's trying to make its way up here. Even up here, Amazon.com is nowhere close to all-time high. I would buy some Amazon.com at these levels. And then you got here Facebook. Facebook is clearly nice bullish pattern here. It also always gives you opportunity to buy on these down days. I would wait for Facebook maybe to touch this 50-day moving average around 352 or 353 and then buy some Facebook at those levels. And here you got Google with the able leadership of Sundar Pichai, clearly doing great here. I would wait for a little pullback and then buy Google. Then you got Netflix here. Netflix, after the last quarterly earnings, stock dropped big time. Now it's clearly going up. It's at all-time high. I would not chase this stock here. I would let this come down. Netflix is one of my favorites because always after the earnings, this stock gives back a little bit. That's a good time to buy stock like Netflix. Then you got Nvidia here with the able leadership of leader. It's a CEO, founder and CEO. It's doing great. This is really one of the emerging companies. I think this can be a clear leader in the chip and semiconductor area along with AMD. So I would be a buyer of this stock on any down days. As you see here, this stock also gives you a lot of opportunity. It kind of comes back and hits this 50-day moving average around 196 or so. That's the good time to pick up Nvidia and go from there. Then you got J&J here. J&J is clearly, it's a great stock to buy right now. As you can see, a stock is trying to hit 50-day moving average. Right now, it's a good time to buy some J&J at these levels and take it from there. Then you got PayPal here. PayPal is wondering where to go. As you see here, it's trying to bounce off of its 100-day moving average. I would buy some PayPal at these levels, and take it from there. And then we got United Health. United Health is a great healthcare stock. If you have health insurance, there is a great chance it could be from UNH or Cigna, some of these bigger companies. This is a good stock. As you look here, whenever it hits around 25-day or 50-day moving average, it's always a good opportunity. Right now, it looks like it's trying to bounce off of its 25-day moving average. I would be buying UNH. It's one of the big weightings in Dow Jones Industrial Average. This should do well as we go forward. Then we got Merck here. Merck is one of my great stocks to trade in and out. As you see here clearly right now, they are below their moving, 50-day, 100-day moving average. It's a good time to pick some Merck up. Merck always comes back, as you see here, came down, went up, came all the way down, went up. It's a good time to buy Merck here at these levels. Then you got Medtronics. Clearly, this is also a great stock to trade in and out. As you see here, it came down, went up, came down, went up. Now we're at all the way high here. So I would wait a little bit to pick up Medtronics. And then you got JP Morgan. JP Morgan is doing great of late. As you see here, there's some fear that inflation is picking up. Fed may raise the rate. That's why JP Morgan is doing great. I would wait a little bit, pick up on the down days and take it from there. Then you got Berkshire. Berkshire is right now trying to bounce off of its 25-day moving average. This is a good stock, good long-term stock. I would probably buy some at these levels. If it comes down to 50-day moving average around 282, I would buy more. Then you got Visa here. Clearly, Visa is trying to bounce off of its 100-day moving average here. I would be buying some Visa at these levels and take it from there. And then you got Home Depot here. Home Depot, I think after the quarterly earnings, stock came down big time. Now it's trying to go up. I would buy some Home Depot here. And also pay close attention to RSI here and IV percentile. Especially if you're an options trader, pay attention to IV percentile. When IV percentile is low like this, like 7.8 and 13 for Apple, that's when you kind of buy options. You don't sell the options at those levels. Also pay attention to RSI levels. Typically when the RSI is high, like 64 here, and IV percentile is low, be careful. Don't buy call options outright, because RSI is telling you stock is oversold. I mean, stock is overbought. Because it's above 55, it's overbought at these levels. So wait a little bit, wait for RSI to cool down below 50 or so. Then you can buy Microsoft, either stock or even call option for that matter. So that's why pay close attention to IV percentile and RSI levels. If you're an option trader, even if you're a stock trader, or a stock investor, from an entry position perspective, good to look at the RSI levels. Make sure when you're buying when the RSI is low, and also you're buying when IV percentile is a little bit lower. On the other hand, if you're an option seller, you may be a put option seller, a premium seller, or you may be a call option seller. Look for high IV percentile. As you look through here, I'm trying to spot here quickly. So it looks like all these big names right now, you can't make money selling options because IV percentile is relatively low. But as we look at the next chart, we could spot some and take it from there. Next, we got here, next tier of these big names. We got Oracle with Larry Ellison and Safra Catz trying to bounce off of its 25-day moving average. Oracle, wait for the earnings. I think earnings will come up probably. It's still one of the late earning reports from Oracle. I think earnings will always have some surprise when it comes to Oracle. I would be trading a little carefully around the earnings with Oracle stock here. Then we got SAP. SAP, as you can see here, it has got big up and downs here. I would wait a little bit for SAP to cool off before investing. Then we got here Shopify, clearly trying to bounce back after the big drop here. I would be a buyer of Shopify on the down days. Then we got here Snapchat here. Snapchat clearly went up after the earnings. Big gap up here. Now trying to search for direction here. I would be a buyer around 70 or so, which is a 50-day moving average. Then we got Twitter. Twitter is a good buy at these levels here. I would be a buyer of Twitter. Stock has come back here, low RSI below 50. I would buy some Twitter. Even if you're an option buyer, you could buy Twitter call options, maybe 70 delta or so below the current price, and that'll be good. Then you got Take-Two Interactive. Clearly, all the video game stocks like Take-Two, Electronic Arts, Activision Blizzard, Zynga, all these good names, even Unity Software, those are all good ones to buy. Slowly, looks like right now folks are deciding, should we go back to work, should we play outside, should we go outdoors versus playing video games. That's why some of these names like Take-Two could be good to buy now. With the stock selling off at these levels, low RSI, it's good to buy at these levels. Then you got AMD here. AMD is in a bigger bull market, as you can see here, clearly above 150 25-day moving average. I would be buying AMD on any pullback here. Lisa Su, the great CEO, she knows where to take the company. She's a visionary leader. Then you got here Moderna. Moderna is a great play. As I've been watching this company for a while of late, it's got a big drop here, then it tries to bounce back. I think looks like it's trying to trade off of its 25-day moving average. Whenever it drops below 25-day moving average, I would buy some Moderna. It gives a good opportunity to trade in and out. But long term also, Moderna has got a lot of catalysts in its pipeline, a lot of cancer oncology indications and treatments on the pipeline. I think longer term Moderna will do very well, but you could also trade in and out if you're a trader, because it always tries to hit its 25-day moving average, bounce off, and sometimes also tries to hit 50-day moving average. And then you got here American Express here. After the big drop here, it's trying to pick up right now. I would kind of wait and watch here. So right now it's picking up because there's a booster shot coming. More and more people are going to travel. That's why it's going up. I would wait for it to cool back a little bit. As you can see here, American Express always gives you opportunity to buy. It tries to bounce off of its either 25 or 50-day moving average, or even 100 for that matter. I would buy this on a pullback and take it from there. And then we got here CVS. I think it's in a good territory to buy here. Trying to bounce off of its 50-day moving average here. I would pick up some CVS again at these levels. It's a healthcare type stock here. It also has pharmacy business and insurance business. Then we got here AbbVie. AbbVie, I think right now it's trying to pull back a little bit. I would probably buy around 117 levels. I think it'll bounce off of its 25-day moving average. I like AbbVie. It's a great company. They got some great indications, including Alzheimer's. Then you got Edward Life Sciences, again a medical device play here. Great stock. I think this is doing great. I would buy this on some of the down days as it comes and touches around 25-day moving average, around 114 or so. Good time to buy some Edward Life Sciences. And even if you're a long-term investor, it's good to buy some Edward Life Science and Intuitive Surgical and Medtronic. These are medical device plays. And then you got here Bank of America. Clearly, this is not the time to buy Bank of America, but if it pulls back around say 40 levels, I would be buying Bank of America stock. It's a great stock. The interest rates might go up. That will help Bank of America. Then you got your Citigroup here. Clearly, as you look through here, it goes up and down pretty nicely. But right now, I would wait for it to hit probably say 50-day moving average around 70, and then I would pick up some Citigroup here. We got here Mastercard, one of my favorite names. Right now it looks like it's in a downtrend, trying to bounce off, and right now its 200-day moving average is acting as a resistance level. I would buy some Mastercard at these levels slowly and accumulate. And then you got here Lowe's, home improvement play, along with Home Depot here. Clearly, I would wait a little bit. After the quarterly earnings, stock went up great. I would wait a little bit for a little pullback here. Then I would buy Lowe's. Great leadership. It's a turnaround story. Next, we'll look at some of the major ETFs. So we'll not drain through the slide, but quickly cover some major ETFs here. So what I've done is I've sorted this by 1 month performance. As you see here, on a 1 month basis, semiconductors clearly led the way. It's done great. And then you got financials, XLB materials should be helped by federal government's infra bill as example. You got Russell 2000. Think about small cap names. They have done nicely, and technology and Nasdaq have done well. So as you look through here, 1 month performance perspective, many of these names have done great. But if you look through bottom of the chart here, we got interest rate, IEF, ETF, it's down for the month. Consumer discretionary down for the month. XAR, some of these big defense contractors, they have done not so great. So as you look through this, if you want to buy for long term, look at the RSI levels as example. So as you see here, some of the RSI levels for EEM as example, right now it's 50. I would buy some EEM at these levels, emerging markets. And look at FXI. Even though everybody is scared about China's crackdown of these shares, I would buy some Chinese large cap ETF like FXI here. Right now RSI is 45, completely oversold, down 26%. If you're a stock person, if you don't want to buy FXI, you could buy some big names in China. Think about stocks like Alibaba, JD, even Weibo for that matter. Think about Neo, XPAO, and even Bilibili, and some of those good names here, even NetEase. So those are the good ones to buy if you don't want to buy FXI outright. And also look at consumer staples, XLE, XAR. You could pick up some of those good names in those areas, but don't chase the stocks. For example here, SMH, near all-time high, near 52-week high. XLF, clearly at 52-week high. So that's why, don't chase when they're at 52-week high. Instead, look for the areas where it's pulled back nicely, like FXI, like EM, and so on and so forth. Next, we'll look at ETF winners. As you see here, many of you want to trade in and out. I know that very well. So this is where looking at this ETF winners will tell you where you can, what you can do from a trading opportunity perspective. As you can see here, what had done nicely in a month's time, we got a Grayscale, Ethereum, and we got your Bitcoin. Clearly, they've done great. Bitcoin is one of the favorite, trading vehicle invented. So if you're a trader, pay attention to ETH, GBTC. They go up and down drastically. I think those are our great trading opportunities. But if you're a stock person, don't want to buy these ETFs, you could look at Marathon Digital, BT, and some of these names here, and even the blockchain company, and buy some of those names, and they will do well. They have their ups and downs. We will look at some of those names as we look at later, maybe part 2 of this segment here, and go from there. Clearly, from an RSI perspective, the cryptocurrency or Ethereum and Bitcoin, they're a little high for me. I would, look for some pullbacks, but we could be selective and buy some stocks. UNG here, United States Natural Gas, right now RSI is 70. Wait for a little pullback here and take it from there. And as you look here, cybersecurity doing great. Batteries, electric vehicle battery, lithium battery doing great. And we got here home builders, KBE regional banks are doing nicely. Semiconductors doing great. And cloud stocks, they're doing very well. So this is where you can look at some trend here. And if you're a stock buyer, look at some of these ETFs, click on them and you can look at their holdings, buy some of those holdings, and especially look for RSI levels which are a little bit below 55 if you want to time the market, if you're a trader. But long term, you could buy some of these names, hold it for a long time. So with that, let's look at ETF losers. ETF losers will give you some very good opportunity to pick up some of the names in those areas. For example, last 1 month we got here MJ here, which is really the cannabis industry, cannabis ETF. Looks like it's down 4%. This is where you can look at some cannabis names here. Think about Grow Generation, think about Tilray, and couple those names in the MJ or cannabis names, and buy some of those, even Canopy Growth for that matter. They will do well. And then you got here GDX and silver, gold and silver, both are down. You could pick up some quality names in this sector and buy them. I think gold typically is a good hedge. You should have some gold in your portfolio, along with the crypto as an example. As we look through here, we got some names here which are down. Some of these oil is down. Silver, we talked about it. XLY, which is consumer discretionary, is down. So some of these names, you could look at some of these ETFs, look at their holdings, look at some of the good stocks with the RSI at lower levels, and take it from there. I've highlighted some here with MJ, which is cannabis, gold and silver. RSI levels are low here, and even some names you could look at and buy them and take advantage of this. But if you look at IEF as an example, it's an interest rate vehicle here. It's a hedge here. I would not invest in this for long term. But if you retire it, okay to have some some money in your bond or interest rate area. But normally they don't do well in the longer term. They will hold the value, but appreciation may be a little bit low. So with that, thank you very much. Happy investing and trading. Please subscribe. What we'll do is in the subsequent sector or a parts, I will look at the small cap, mid cap, and large cap names and take it from there. Thank you very much. Happy investing.